Michael Burry is a name that has become synonymous with defiance, precision, and a deep understanding of human behavior in the world of finance. His story is not only about numbers or trades, it's about the psychology of going against the grain. The core of Burry's success lies in understanding why people behave the way they do in markets, and how emotions, fear, greed, and conformity shape investment decisions far more than rational analysis. To understand Michael Burry's contrarian psychology, we must first understand the foundation of how the human mind interacts with risk and reward. Most investors follow the herd. They feel safer when others agree with their decisions. The market rewards conformity in the short term. It feels good to buy when everyone's buying, and it feels safe to sell when everyone's selling. But the paradox is that the market's greatest opportunities often exist when doing the opposite. This is where Burry excels. His ability to act independently, to question the obvious, and to withstand the pressure of being alone in his convictions is what sets him apart. Burry's contrarian mindset did not come from arrogance but from observation. He studied medicine before finance, which gave him an analytical framework for identifying patterns and diagnosing problems. Just like a doctor studying symptoms to uncover an underlying disease, Burry analyzed financial markets to uncover systemic weaknesses. During the mid-2000s, when the housing market was booming, investors celebrated easy profits and ignored the risks piling beneath the surface. Burry, however, spent hours reading through mortgage-backed security documents, thousands of pages no one else cared to look at. What he found disturbed him: unsustainable loans, dangerous leverage, and an inevitable collapse waiting to happen. The psychology of the herd told the market one story: housing prices always go up. But Burry saw what others refused to see: the truth hidden beneath collective denial. What drives someone to take such an unpopular stance? The answer lies in emotional detachment and intellectual independence. Burry didn't seek approval from others. In fact, he seemed to prefer solitude. He once said, "The greatest risk is not knowing what you are doing." That statement reveals a core part of his philosophy: risk isn't about volatility, it's about ignorance. When everyone follows the same narrative, they become blind to the risks it hides. The psychology of contrarian investing requires not just intelligence but courage, the ability to look foolish in the short term to be right in the long term. How many people can endure being ridiculed by Wall Street and their own investors while holding on to their convictions? Few can, and that's why few achieve what Burry did. In many ways, Burry's story is a mirror to human nature. We crave certainty, validation, and community. But the stock market punishes emotional dependence. The crowd often acts irrationally, buying high out of greed and selling low out of fear. Contrarian investors like Burry profit from these emotional cycles because they remain grounded in logic when others are consumed by emotion. His decision-making process was guided by data, not headlines, by principles, not popularity. In doing so, he exposed not only financial bubbles but also the psychological fragility of the modern investor. To understand Michael Burry's psychology as a contrarian, one must explore his relationship with discomfort and isolation. Most people equate success with consensus, but Burry knew that the crowd is usually late. He spent nights studying complex data sets, building models, and testing hypotheses. His investment thesis wasn't validated by social acceptance but by internal conviction. When he began shorting the housing market, the world thought he was insane. Banks laughed at his credit default swap requests, investors begged for their money back. Yet, he stayed the course, not because he was stubborn, but because he trusted the math. That level of conviction requires emotional discipline and intellectual honesty, traits that are rare in a market ruled by ego and excitement. Psychologically, Burry was detached from market euphoria. He didn't care about the next big thing. Instead, he focused on asymmetry, the imbalance between potential gain and potential loss. When emotions drive the market upward, logic becomes a whisper lost in the crowd's noise. Contrarians like Burry amplify that whisper into a signal. They listen to what the data says, not what the market screams. The irony of contrarian investing is that it's emotionally exhausting. It demands patience when others are euphoric, confidence when others panic, and the humility to admit when you're wrong. Burry often faced immense stress during the years before the 2008 crash. Investors abandoned him, the media mocked him, and the institutions he warned refused to listen. Yet, he continued reading, analyzing, and preparing. That persistence reveals something profound. True contrarian thinking is not just about taking the opposite view, it's about holding the rational view when emotions distort reality. The deeper psychology behind this approach stems from self-awareness. Burry understood his own biases, his tendencies toward overconfidence, and his need for solitude. Unlike many traders who chase dopamine from daily fluctuations, Burry built his decisions slowly and methodically. His detachment was not emotional coldness, it was discipline. He trained himself to feel discomfort and yet act logically. That ability to separate logic from emotion defines all great contrarians. They are not rebels for the sake of rebellion, they are truth seekers in a world addicted to illusion. Imagine being in Burry's position in 2007, holding massive short positions while the world around you celebrates record profits. Every day, you're told you're wrong. Every day, your investors question your sanity. That psychological pressure could break most people. But Burry saw what others couldn't because he understood human behavior. He knew that people ignore inconvenient truths until they become impossible to deny. He knew that greed blinds logic and that denial delays disaster. His ability to stay calm while the world was losing its mind is the essence of contrarian psychology. At its core, Michael Burry's contrarian psychology is about intellectual integrity. He never sought to predict the future, he simply followed the evidence where it led, no matter how uncomfortable the truth. This mindset allowed him to see cracks in the system before anyone else. But the lessons extend far beyond the 2008 crisis. They apply to every investor, in every era. The market's greatest danger isn't volatility, it's consensus. When everyone believes the same story, skepticism disappears, and risk multiplies. The contrarian, like Burry, thrives in uncertainty because he understands that truth is rarely found in the crowd. Contrarian investing requires more than financial analysis, it requires emotional mastery. The ability to control fear and greed, to resist the temptation of validation, and to make decisions in isolation is what separates average investors from exceptional ones. Burry's success proves that the human mind, not algorithms or data, is the most powerful investment tool. But only if it can remain disciplined under pressure. The crowd follows emotion, the contrarian follows evidence. The crowd seeks comfort, the contrarian seeks truth. And in that distinction lies the foundation of long-term success. What can we learn from Burry's psychology today? We live in an era dominated by hype, meme stocks, speculative trends, and social media noise. Everyone wants quick profits and instant gratification. But Burry's lessons remind us that true wealth comes from patience, independent thinking, and courage. To think differently in a world that punishes difference is the ultimate act of strength. The next financial crisis will not look like the last one, but it will be born from the same human flaws: greed, overconfidence, and denial. The question is, will you have the courage to see it before others do? In the end, contrarian investing isn't about rebelling, it's about thinking clearly when the world doesn't. It's about having the confidence to question what everyone accepts as truth. And as Michael Burry proved, that clarity of thought, no matter how lonely, can change the course of financial history. Michael Burry's philosophy of contrarian investing extends far beyond financial charts and market cycles. It reaches into the heart of human psychology, where emotion often overrules logic. To truly grasp what drives Burry's decisions, one must understand how he views the world. He sees markets not as efficient systems but as collective expressions of human behavior, driven by impulses, fears, and delusions. His approach is rooted in skepticism, patience, and an unshakable belief that truth eventually surfaces, even when it's buried beneath layers of denial and noise. This final part dives deeper into what sustains a contrarian mindset through both triumph and turmoil, and what lessons investors can learn from his extraordinary discipline. At its essence, contrarian investing demands a kind of intellectual solitude. It's not glamorous. It doesn't attract applause or instant validation. It means spending years researching what others ignore, enduring criticism while holding positions that seem irrational, and trusting data more than emotion. Michael Burry embodies this psychological endurance. When he famously shorted the housing market, his conviction wasn't born from luck or arrogance, it was born from methodical observation. He spent thousands of hours dissecting mortgage data while Wall Street drowned in optimism. Burry saw the truth because he was willing to confront what others avoided. That ability to face uncomfortable realities is the cornerstone of contrarian psychology. But there's another, subtler dimension to Burry's approach: his emotional neutrality. Unlike traders who thrive on excitement, Burry approaches investing with a surgeon's detachment. His medical background taught him how to analyze symptoms without emotion clouding judgment. In the market, that translates into an uncanny ability to remain calm amid chaos. When prices soar and greed dominates, Burry questions the sustainability of the euphoria. When panic spreads and prices collapse, he looks for value in the wreckage. He doesn't react to noise, he studies it. That calm objectivity is what allows him to recognize patterns others miss. The true contrarian doesn't fight the market, he observes it until its illusions reveal themselves. Another critical element of Burry's psychology is his long-term orientation. He once said, "Investing is not about beating others at their game. It's about controlling yourself at your own game." This statement reflects a profound truth. The biggest challenge in investing is not the market, it's the investor's own mind. The crowd always seeks short-term gratification, but Burry's strength lies in delayed gratification. He's willing to look wrong for years if it means being right in the end. That patience is rare in a culture that celebrates speed and rewards conformity. The irony is that contrarian investing often feels like failure before it feels like success. When Burry's fund faced redemptions and ridicule before 2008, he could have folded. Instead, he held on because his research gave him conviction deeper than the market's opinion. The emotional toll of being a contrarian cannot be overstated. Imagine watching your thesis unfold in slow motion while the world dismisses you. Imagine the psychological burden of waiting, knowing you are right but unable to convince anyone else. That is the loneliness of the contrarian. Yet, it's also their greatest advantage, because the crowd's comfort is their vulnerability. Burry thrives in that discomfort. His mind is wired to seek truth, not popularity. That's why his predictions, whether about housing, inflation, or tech valuations, often sound radical at first but eventually prove insightful. He operates with a fundamental belief: if everyone agrees, the opportunity is gone. At a deeper psychological level, Burry's contrarianism reveals something timeless about human behavior. People crave certainty. They build narratives to avoid facing uncertainty. Markets, therefore, are reflections of collective denial and hope. Contrarians profit from that denial. They wait until the narrative cracks, and reality reasserts itself. Burry's edge lies in his ability to endure that waiting period. He doesn't time the market, he times the psychology of the crowd. His 2008 bet succeeded not because he foresaw the exact date of the crash, but because he understood how long it would take for denial to collapse under its own weight. That patience, combined with analytical precision, makes him one of the most psychologically disciplined investors of all time. In today's markets, where information travels at lightning speed and social media amplifies every opinion, contrarian thinking is harder than ever. Consensus forms quickly, and pressure to conform is immense. Yet, Burry's philosophy remains timeless: seek truth, not comfort. Ignore noise, focus on fundamentals. When everyone rushes in one direction, pause and ask why. What are they not seeing? What emotions are driving their decisions? The answers to those questions often hold the seeds of opportunity. As Burry himself might say, markets are efficient only at reflecting human irrationality. Ultimately, the psychology of contrarian investing is a battle within. It's not just about identifying overvalued assets or irrational trends, it's about mastering one's own impulses. Can you remain patient when everyone else panics? Can you stay humble when proven right? Can you endure criticism without losing conviction? These are the real tests of a contrarian. Michael Burry's life proves that true investing genius is not in predicting the next move but in understanding the human condition. He doesn't just invest in markets, he invests against collective emotion. As we conclude this exploration of Burry's contrarian psychology, consider this. When the next bubble forms, and it will you follow the crowd, or will you question it? When fear grips the market, will you run with the herd, or will you see opportunity in the chaos? And most importantly, do you have the patience to be right long after everyone has stopped believing you are? Michael Burry's story is not just about finance. It's a study in courage, discipline, and the power of independent thought. His greatest lesson isn't merely how to profit from the crowd's mistakes, but how to avoid becoming part of it. Because in the end, the real challenge is not beating the market, it's mastering yourself. And that wraps up our deep dive into Michael Burry's Contrarian mindset, a philosophy built on patience, courage, and independent thinking. If there's one thing to take away from his story, it's this: true investing genius isn't about following the crowd, it's about questioning it. The next time markets rise or crash, ask yourself, what would Burry see that others don't? If you found this video thought-provoking, make sure to subscribe for more in-depth explorations into the minds of legendary investors. Your support helps us continue uncovering the hidden psychology behind the world's greatest financial decisions. And now I want to hear from you. Do you think being a contrarian is still possible in today's hyper-connected world? Share your thoughts in the comments below.